Hey everybody, how you all doing? Welcome to Astropods. I am Hassan. On the podcast today, I'm talking to you guys about GameStop stock surge. It's no longer news that this company's stock has risen beyond people's wildest imaginations. And some big people are losing a lot of money, while some small people like you and me are smiling to the bank. A lot of things are involved in this whole process that needs to be talked about. Yes, for full disclaimer, I am not a financial expert, I'm not a banker, neither am I an accountant. But I'm a curious person, so my curiosity has led me to read for days now just to understand what I'll be talking to you guys in less than 15 minutes. So let's go. Few things we have to understand. First is, what is short selling? What is short squeeze? What do they mean when they say hedge fund companies? What is HFTs? And how does Robinhood actually make their money? So many questions. All right, so let's start with short selling. Okay. So short selling is basically a process where investors who bet against a company and are rewarded when its stock price falls. To short a company, a seller typically borrows a stock and then sells it immediately with the intention of buying the stock back later once the price drops. The seller then pockets the difference in price. Now, that is one way to look at it, okay? So let's now go back a little bit. That's what short selling is, okay? Now, what is short squeeze? That's the next question I would like to answer. Short squeeze is a situation where every stock buying forces short bettors to buy shares of the stocks to limit their losses, therefore increasing the stock price even more. Now, what am I talking about here? Okay, let me tell you what hedge fund is. Then I'll now try to put everything together so that we can get it in layman's language. Hedge fund is an alternative investment that is designed to protect investment portfolios from market uncertainty while generating positive returns in both up and down markets. So that's what hedge fund does. Hedge funds help investors to maximize profit while minimizing risk. So I think we are getting something out of this now. Now, let me now try to put them together for you guys. How does short selling, short squeeze, and hedge fund tie together? We can sort of put everything in the role Robinhood and all these other brokerage firms have played. So Robinhood is a brokerage firm, just the way Citadel is a brokerage firm, but there are levels to this. So Robinhood now, this is how they make their money. When you place a market order to buy a certain stock from Robinhood, Robinhood will now bundle it alongside others too and send them to a high frequency trading firm that they call them the HFTs. Those ones too, they're also brokerage firms too, but they are not they're the big dogs. All right. So they get this information, this trade orders that you and I have traded on Robinhood. Robinhood sends to these people, and so what happens is this: Robinhood send it to that HFT companies instead of sending them to the actual stock exchange. Now these companies now execute these trade orders. Okay, we now execute this trade order and pay Robinhood a small commission. Now, this is where things get interesting. These HFTs, all right, make their money by taking advantage of price fluctuations in the market. They possess a super technology in algorithm that can sort of identify trends and execute transactions in milliseconds and make tiny profits, but on a huge volume of transactions. Do you get what I'm saying? So it's basically saying that when we trade on Robinhood, Robinhood does not go to the stock exchange to sell or buy those stocks for you and me. No, those information that we put in that, so you want to buy 20 shares from Coca-Cola, they don't go and they will not go to stock exchange. They will send this information to these HFTs like Citadel, like 2 Sigma, okay? And in return, because of this huge volume of transactions that Robinhood and Charles Schwab and all those companies have sent to those companies, in return, those companies will now give Robinhood and those other companies that give them those permissions a percentage. So even though Robinhood is a commission-free investment or stock brokerage app, they still get money when you trade on their platform, because they send those things to those bigger brokerage firms. And this is what those bigger brokerage firms do. Like I said, they make their money by taking advantage of price fluctuations in the market. You know, they have this algorithm that can execute things in seconds. Okay. Now, this is where things get more interesting. Okay. All these companies, right? To put them in a simple perspective, by buying the order from brokers like Robinhood, it fits their algorithm data, all right, about the impact these orders will have on a given stock price, and automatically takes advantage of it. That's how those companies make their money. So they have figured out that, okay, this is how you guys are buying your things. They can tell the trend of how the business is looking right now and what will happen in the very near future. So that information that they have already gotten from our purchasing power, they are the ones that all those edge companies will now go to know what is the future looking like for X company, for Y company. With those kind of information, all right, they borrow those stocks. I beg your pardon. Those hedge fund guys, they borrow. That's how this stock selling comes into play, right? The hedge fund companies go to these big brokerage firms to know the ebbs and valleys of the business in like 6-month period. With that information, they borrow those stocks from those people. All right, they borrow stocks. With that information, they borrow the stocks, and what happened is that they in turn now sell it, all right, to other investors. They know that this stock is no good, but they won't tell you that because they've already seen from companies like Citadel's algorithm that this company, like for instance, they already knew that Century 21, that big time retail store, will be shutting down. They already knew that. Some people made massive money from that, billions of dollars from that company shutting down. All right. So they already saw that thing come from like, okay, this company is going to go down in the next 6 months or 20 months. They already figured that out a long time. So what happens is that they know this, but they will not tell you, the investor. They'll sell those stocks to you. And now when you bought those stocks, like, oh, you are hoping that the stock will go up. They know it's not going to go up. They know it's going down. Okay. So when it start going down, all right, you now be like, oh man, I want to trade these stocks. When you now sell those stocks, they bought it from you. Okay. When they buy the stock from you, you sell it to them. Sorry. You remember that they borrowed the stocks. All right. So that means they have to return it back to where they got it from. Talking about the hedge funds now. So the difference in the price, let's say they sold the stock to you at the time for market value of maybe $20 per share. And now you are losing money. So you're saying, man, I'm going to sell the stocks back to them. So you sell it to them. Now the stock is now worth $10 per share. That $10 difference is what the hedge fund companies, that's how they've pocketed money. That's how they've made money from that. That's how all their investors, those portfolios that they're managing, that's how they make money. That's how they make added money. Like I said, hedge fund make money when the market is going up and down. It's their business to know how and when to trade. That's what they do. So that's how this thing happens. So when Robinhood now decided to stop some of these companies, to shut the GameStop app, trade down, is because they told us that they needed to have funds because people are making a lot of transactions. They need to have enough deposits, but that's not the entire truth. They needed time that's where this short squeezing now comes in, because in a case where these companies are not recording losses and their stocks is going higher. Now, what happened is that, you remember that they borrowed those stocks, right? So they have to return it. They have to buy those stocks. They have to return it back to where they got it from. When the stock is now going higher, looking up, there's a short squeeze because now they have to buy those things. There'll be a frenzy. They have to buy those stocks now and give it back to where they got it from so that they will not have too much losses incurred. And if there's anything you don't know, I mean, if there's anything you should know about stock exchanges, it's all about the forces of demand and supply. So when they see that the demand for that stock is increasing, they were expecting to decrease, but it's increasing. They have to buy it quick and sell it quick so that they don't lose too much money. So that is why Robinhood and all this have to shut it down for a while so that those guys can be able to buy those stocks. So now you, the regular guy that wanted to buy the stock, you're not able to buy it because they will allow those hedge fund companies to buy them instead of you. And that's the whole thing. And that's why people like Ocasio-Cortez, Omar, and all those other, even Ted Cruz, are saying that these companies should be probed, that Robinhood especially, because they've again sided with the big guns and crushed someone like you and me from making money. Now, let us take a step back and talk about it in a different angle now. Late last year, right? There's a gentleman called Ryan Cohen. Ryan Cohen is an e-commerce genius. He co-founded Chewy, a pet store, all right, online. They do their sales online and other companies like that. So Ryan Cohen announced that he bought more than 9 million worth of shares from GameStop. Okay, people like, okay, hold on, wait a minute, what is going on? Why is Ryan Cohen buying stuff from a company that has recorded 7 straight quarters of losses? Even though, because it's a brick and mortar store and they are going down. We all know that Amazon is making more money than anybody else right now. But he bought it. Soon after, it was announced to be among the people that are on the board of directors of that GameStop company, along with 2 other former executives from Chewy. Then after that, BlackRock, I believe that's the name of this hedge fund company, announced that they have more than 20% of the entire equity of GameStop. That they have a controlling stake in GameStop. That's a hedge company that's supposed to be also short betting on GameStop stocks. They announced that. Okay. Then this last one that capped it all off. In December last year, Microsoft partnered with GameStop. There you can see that. Now you can see the move that Ryan Cohen is making to put this company back on a good level, right? They made a partnership with GameStop. That's Microsoft. That is a move to put the company on the path of being an e-commerce company. No more brick and mortar, so they can stay and be relevant. Those 3 moves prompted, along with the fact that people in this online platform, Reddit.com is a social media platform. There's this group there called Wall Street Bets. They saw that move, coupled with the fact that a lot of companies like the Melvin Capitals and Bridgewaters and so on and so forth, those big time hedge fund companies, have betted more than 80% of this company's stocks were short sold. They have betted against this company that they are surely going down. So this, along with that fact I just told you, made the Wall Street Bets group that has more than 6 million active members on that group in Reddit to say, you know what, guys, let us start buying this company shares. Let us put these people to shame. This is what I want to tell you guys. That is not they want to be rebellious. No. There's no free lunch. Some people must have told them, because you need to cause a frenzy for Ryan Cohen's $9 million shares not to be in vain. You need to cause a frenzy in the market, in the stock market space, for the 20% stake of BlackRock not to be in vain. You need to create a frenzy for Microsoft to believe that this thing can actually work. So now this Wall Street Bets come together, and what happened is that they started encouraging their users, their members, to start buying stocks from GameStop. Remember that the hedge funds that are selling those stocks to you, they are believing that you're going to lose money. So they don't mind selling all the stocks to you. So you go there, go buy. As of last year December, so this thing was last year December, November, it was like $5 per share. Earlier in the month of January, it was $20 per share. So they don't mind you buying those stocks because they know that you're going to lose money. So they are betting that you're going to lose money. But they got played at their own game, because when you start buying like that, once there's a frenzy like that and people are buying it, naturally the stock will start gaining some kind of momentum. And what happens is that force of demand and supply will not kick in, because there's too much demands now and the supply is limited. And for you to have enough supply, you have to increase the price. That's how it goes. And as a result, there's a short squeeze. That is, those companies, like I told you, that say that they are losing money, will now have to start buying those stocks back from, they have to buy those stocks because they know that they borrow those stocks. They have to buy at the particular market rate so that they can be able to return it to where they got it from. And that's the whole game, guys. Now, to bring everything home to you, I will talk from a personal perspective. I bought just a handful of shares from this company, and I did my research. I bought it. All of a sudden, I saw that little shares that I bought had gained more than, had increased its value for more than like maybe 200%. I was like, whoa, what's going on? And I was of the hope that, oh well, it's gonna come down. I'm not gonna put more money to this because this is not looking real to me. Guess what? Till this day, that stock that I thought was gonna go down did not go down. That stock is there and it's like 3 times, or it's not 4 times more expensive than the amount of which I bought it. The whole point is that if you want to invest in anything, it's good to join some of these groups, but it's better to educate yourself, to equip yourself, to be curious, to see what the market is saying, to see the kind of move the management of that company is making, of what the future looks like for that company. Sorry. So these are the things I'm talking about today, guys. It is not all about saying, oh, that bubble is going to bust. What if it never busts? For instance, just last night, I looked up this GameStop stock. It was $312. This morning I checked it. It was $337. See, it may never bust because this company is on a mission to right their wrongs. It may never bust, guys. That is what I'm trying to tell you guys today. So invest when you have the opportunity to, but do not spend your last card on investment because it may actually bust and to be risky for you. Don't let nobody tell you what to do. Do your own research, get your facts, and at the end of the day, I wish that these companies, the Robinhoods, the hedge fund companies, will be probed so that they will not be, because you think that Robinhood is helping you out, but they are not. So at the end of the day, I hope that you're able to get something from this podcast. And this is the end of my podcast. I'm sorry it's a little bit more than 15 minutes, but it's a lot of things to put down in just 15 minutes. And I've come to the end of the podcast, guys. Thank you so much for listening to this podcast. Keep wearing your mask. Keep playing it safe out there. I love you all. Thank you. God bless. Stay blessed. Bye for now.